With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by ChannelChek. This Roadshow features Luis Marchese, CEO of Sierra Metals, NYSE ticker symbol SMTS, TSX ticker symbol SMT. Following a formal presentation, he is joined by Mark Reichman, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on Sierra Metals on channelchek.com or by clicking the link in the description. With that, I am pleased to present Luis Marchese.
Thank you. Thanks for the opportunity to address your audience and go through what Sierra Metals is about and what our exciting plans are for the future. So this is our usual disclaimer. It's in the documentation that you can see online, so please feel free to read it and feel comfortable with it. So I will start with the COVID-19, since this is certainly the elephant in the room. The company from the beginning has been focused, and we are focused now on the well-being of our employees and the local communities near which we operate. We operate near some Indian communities in Mexico and Peru as well, and we've got to be very careful because we are very close to their homes and livelihoods. We certainly take all necessary precautions on our workforce before we try to keep our sites free of COVID, so we have some strict screening protocols that include testing and quarantining of employees, and we certainly monitor their health on a daily basis. All our mines are operating, but having said that, these screening measures have resulted in suboptimal employee headcount at all our mines, and we have felt the consequences of this reduced headcount on our productivity, and we still are feeling some residual effects of this reduced headcount. Sorry for that. So what is Sierra about? We are a diversified metals producer with a strong copper and precious metal exposure. In the top right-hand side, you can see that 36% of production is copper, 25% is silver, 23% is zinc, and the rest is gold and lead. Well, we have three operations, one in Peru called Yauricocha. Yauricocha is a truly diversified metal producer. So its production is mostly zinc and copper, but it has lead, silver, and gold into it. Bolivar is our flagship copper producer. 70% of the revenue comes from copper, and the rest comes from fairly valuable gold and silver byproducts. And Cusi is the smallest one of our three mines, which is a silver mine. As I said, we are a diversified producer. We are a growing diversified producer. We still have projects on the pipeline to keep growing organically. We have a solid balance sheet. We are profitable and we are cash flow positive. Sierra has had a consistent strategy of building mineral resources and bringing them to value with continuous growth of our processing capacity. So it's been quite successful on that, and that has been the history over the last 10 or 15 years. We operate in Peru and Mexico, which are well-known and very well-established mining jurisdictions. And this all is managed by an experienced management team and a board of directors, which is fairly supportive and is focused on maximizing per share value. In terms of corporate capital structure, we have 164 million shares outstanding, $76 million cash on hand, and 93 million total debt. Our share price have been fairly strong over the last, let's say, 10 months. Before that, it was heavily affected by COVID. We are followed and covered by CIBC, Jefferies, Noble, AC Wainwright, and Stonegate Capital Partners. This is the history of growth that I was mentioning before. Aggregate throughput in 2015 was 5,375 tons per day, 2,400 in Yauricocha, another 2,400 in Bolivar, and 600 in Cusi. Right now, we are operating at an aggregate 9,800 tons per day, 3,600 in Yauricocha, 5,000 in Bolivar, and 1,200 in Cusi. As I will share with you later, we have issued at the end of last year 3 PAs for the 3 assets that show that we can certainly grow on the throughput by 100% in both of our Mexican mines and 50% on our Peruvian mines. So we have a strong pipeline of organic growth within our own properties. These are the PEAs that were released last year. Strong NPV and strong IRR on the expansion of the 3 mines. Operating costs that benefit from scale, and mine lives which exceed 10 years, which for underground mines is fairly robust. Our average life of mine rates are fairly good, and so we are in a position now to, based on these PEAs, to increase their output, as I said, doubling both Bolivar and Cusi, and increasing Yauricocha by 50%. Well, this is the base under which we are confident that we can grow, which is the size of our resources. As you can see, in 2016 in Bolivar, we have 18 million tons of resources. Now we're looking at 41 million. In Cusi, in 2016, we have 3 million. We're looking at over 10 million in 2020. And in Yauricocha, we keep a steady 19 million before, and now we are close to 27 million. So as we speak, we are working on PFSs on pre-feasibility studies for the 3 mines in Yauricocha, Bolivar, and Cusi. These are still to be reported. We are working with them, so we make sure that the PFSs are strong enough to show the path for further growth of the 3 operations, while we do it on an orderly, prioritized way for the 3 assets. In terms of, sorry for that. In terms of costs, well, the costs have risen in the first half of 2021, basically as a result of the COVID-19 pandemic, both happening and residual from last year. Peru and Mexico have been particularly badly hit by the pandemic, so we are not far from being affected as well, and that has brought some increased costs on our operation. And on top of that, we have had some operational issues. We are currently working to normalize and stabilize the operations and bring them to a more normal operating conditions. Also, as I said, as a residual from COVID, during COVID, we kept operating, but we had to focus on larger tonnage but lower grade ore bodies to meet the throughput targets. So that only means that we have changed the sequence of mining. So during the first half of this year, we had lower production, but the higher grade ore still is there, and we are planning to mine it in the future. So it's just being a matter of sequencing. Costs remain low, below current realized selling prices at Yauricocha and Bolivar, but Cusi has been badly hit because one of these operational issues that we've had has been added amount of underground water, which came with very high temperatures, which has pretty much led us to change the mine sequence and reduce our operation at the bottom of the mine where we had higher grades and go into the lower grades, which are on the higher levels. As we speak, we are finalizing a new raise bore, and we are for increased ventilation, and we are reinforcing our pumping capacity at Cusi. So in a few months, we plan to go back to normal operations there. In terms of consolidated production, we just revised our guidance due to the first half and what I just mentioned. So we're expecting between 110 and 115 million pounds of copper equivalent, and having had on the first half 50 million pounds of copper equivalent. Our cash costs in Yauricocha and Bolivar are fairly strong, between 120 and 140, and the all-in between 250 and 270. Cusi is still on the high side in terms of all-in per ounce for the year. Our capex guidance for the year is $100 million, but this includes a very exciting iron ore processing plant that we're bringing to the stream at Bolivar. In Bolivar, one of the main area of mining is called Mina de Fierro, which is iron mine. So that part of the mine has certainly copper, which is what we mine that, but has quite a high percentage of magnetite. So over time, we have been stockpiling, let's say, the residues from our plant, and on top of that, we have the current ore that we are mining from that area, that we are now in the process of building a magnetite plant, so we can put that residue and the residues also from the plant through this magnetite plant and produce what we expect is going to be 500,000 tons per year of iron ore concentrate, over 62%. So this is very exciting. Bolivar has this benefit of having the logistics for the iron concentrate fairly resolved as we speak. There is a train station 40 kilometers from where we operate. That's where we take our copper concentrates, and we can take it down to the port on the Pacific, the Topolobampo port, which has capacity to manage our concentrate. So the added infrastructure that we have to put in order to bring this concentrate to the market is the magnetite plant, which is fairly simple. Fix the road so we can put some more tracks into it, and then just make the train operate with our iron concentrate. So it's a low capex, high return project, which we are bringing into construction in the following months, and we certainly expect to be at full production by the end of H1 next year. In terms of our current total EBITDA guidance, it's going to be between 130 to 140 million at consensus prices, slightly higher at spot prices. In terms of EBITDA, in the first half of the year, we had 63 million capex of 34 million. So still we have 65 million to go in the second half of the year. Our free cash flow have been 13 million. Our net cash flow $4.5 million. As I said, we currently have cash and cash equivalents of close to $76 million. So let me do a brief description of our three assets. Yauricocha is in Peru, is in the highlands of Lima, actually. Is between 4,100 to 4,600 meters above sea level. In this picture, you can see the shafts at 4,600 meters above sea level, and the areas that we mine. This is a projection to surface of the area that we mine. So we have the central mine, we have Cuya Mascota, we have Esperanza, and further down we have an area which is called Escondida. But most of our mining now is between the central Cuya Mascota and Esperanza areas. It's been operating since 1948 and it still has plenty of resources in a very geologically amenable area for mining base metals. This is a fairly robust area for exploration and for development of all resources. So we're currently working on this area, but we in this area have 20,000 hectares of mining concessions that we have planned to keep exploring and eventually bringing to the market. Very exciting area. As I said, it has been operating for over 70 years now, and it has plenty of resources for the future. Well, our ownership is 82%. It's 18,000 hectares. It's a diversified metal producer, underground mine. Our mill throughput capacity, the permitted capacity, 3,600 tons per day. We can add another 5% to it, which would bring it to 3,780. But the plant has shown that we can eventually put through 4,200. So our limit for processing is the permitted processing rather than the actual capacity of the plant. It has 27.5 million tons of resources, most of it in the measured and indicated, and the zinc equivalent grade, as you can see, is between 4.75 for the inferred and 6% for the measured and indicated. Yauricocha is a fairly strong cash flow generator, let's call it. In the first 6 months, it generated $42 million of EBITDA and a fairly low cash cost per ton process of $60, and the all-in for copper equivalent at $262. The revenue mix is copper, zinc, so it has like a natural hedge between different base metals, but it's very well positioned for the future, and that's a strength of Sierra Metals. The metals that we are mining are the ones that will be required for the green energy, particularly copper, zinc, and silver. So Yauricocha, even though it's been operating, as I said, 70 years, it's a mine for the future. This is a cross-section of the mine. The central area, Esperanza, Cuya Mascota, Cachicachi. So as you can see, it's along this line. We're currently driving what we call here at the level 1070, the Crucero 5000. So we are actually drilling to find the resources that we expect to find between the different areas. So eventually we can have a fairly continuous mineralization to get our ore from on the horizontal, but also on the vertical, our ore bodies go further down. So we have not only the resources that I just shown, but also additional areas where we can find additional resources at a low cost. Bolivar, it's in Mexico, it's near Chihuahua, it's 6 hours drive from Chihuahua. Again, prolific geological setting. It was very small 10 years ago. Now it's 5,000 tons per day. We're expected to take it to 10,000 tons per day. Here in this picture, you can see on the side the green of the copper. So very attractive area which we have been developing for over 10 years, and we expect to grow in the future. We own 100%. The size of the mining concessions is 15,000 hectares, similar in a sense to what we have in Yauricocha. Our main commodity is copper, but strong byproducts of silver, gold, and now iron ore, which we're going to bring into the market next year. 5,000 tons per day. We have over 40 million tons of resources at a copper equivalent grade of 0.95, 0.96. So provided these are massive, rather massive ore bodies, the cash cost is fairly low for this operation. And you can see here our revenue in the first half of the year was $44 million. The EBITDA was close to $22 million, and the all-in was $3. But last year we could achieve between close to $2. We certainly expect in the future to bring the all-in back down to where it should be, provided the fundamentals for this mine. The revenue mix, as I said, 70% copper and the rest silver and gold. And Cusi is our smaller mine. Yauricocha is 60% of our revenue, Bolivar is 30%, and Cusi is 10%. So it's our smallish mine. Again, very exciting geological setting. It's mainly silver. We have our plant Malpaso at 1,200 tons per day. Last year's production was 1 million ounces of silver equivalent. Our resources is 10 million tons at a silver equivalent of in the area of 200 grams per ton. This is a very old mine. It has been mined for hundreds of years, but still providing exciting opportunities for silver mining and eventual growth. It hasn't been that strong in terms of the EBITDA. It's been over $1 million. But as we streamline the operation and we get over these current operational issues, we certainly expect to bring it back into the cost base that the fundamentals of the mine would bring us to. So why invest in Sierra Metals? It has a strong growth story, as you have been able to see on the graphs and on the tables. It's been delivering on growth, both on the resource and on the production. We operate in well-established mining jurisdictions, so we know them. The areas where we operate, people know mining. So we work together with the communities. We employ local people. We hire local suppliers, and we have a fairly robust relationship with our areas of influence. And the countries where we operate, Peru and Mexico, are mining countries. They have their own challenges, but mining is very important in both jurisdictions. We have experienced management team coming from strong backgrounds, and the board is very much focused on per share value. As I've shown, we have a solid financial position, a robust operational track record, Even though we've had our hit due to COVID, we have been operating throughout the whole pandemic, and we are certainly, as we speak, stabilizing our operation to go into the future. And our diversified asset base is a strong part of our value proposition. We have the right metals. Copper, zinc, silver are the right metals for the future. And also, which I have not mentioned, we also have another very interesting land position in Mexico, in particular, for further exploration. So beyond our 3 operations, we are doing additional greenfield exploration to look into our next successful mine.
Thank you, Luis. I'm Mark Reichman, the Noble Senior Analyst who provides research coverage of Sierra Metals. I'll be reading the questions submitted for Luis's response. So the first question is, for each of your mines, at what % of normal is your workforce operating, and how is that number trending?
Well, it has been changed. Now we are pretty much 100%. But as an example, in Bolivar, in the first 2 months of the year, we didn't have like a third of our workforce. In Yauricocha last year, we were again like at 2/3, and this year we have been at 85 to 90%. So that's what we mean by residual, Mark. We have been able to keep operating, but we have left things to do, like development or exploration, or even like technical visits or suppliers visits or improvements that we were planning to do. So that has hit us hard. For example, as well, even with the government, we were planning to get our expansion license for Yauricocha early in the year, but the government wasn't operating. They didn't have the people as well. So this has been an issue all along. And even though we might be at 100% workforce now, we still have some residual effects from COVID that we want to normalize.
So you're playing catch up in some respects in terms of some initiatives that you would have done earlier had you been at 100% back then. So the next question is, any early observations on the new presidential administration in Peru?
Well, it's hard to tell. They have been sending mixed messages, Mark. On one hand, they have been talking about taxing further the mining industry, but on the other hand, they now seem to understand that Peru is a heavily taxed part of the world, and if the taxes for Peru are increased further, then Peru would lose its competitive position. It would affect the industry. So in terms of taxes, we don't know yet. In terms of other policies, again, it's still too early to say. The Prime Minister is going to Congress in a couple of days to show what his plans are. So we are in a bit of an uncertainty as we speak.
Well, it does seem that most of the mining companies with significant operations in Peru have been penalized a little bit in the market based on those concerns. Do you think it's overdone? Do you think the worry is about right? Or what do you think needs to happen, to maybe lift that discount a little bit, that's associated with the political risk?
Well, uncertainty doesn't help, Mark. I think the first thing that the government should do is try to fix that and be certain of what they are planning to do, or what they are proposing to do. And also, I think there is a bit of understanding of the industry in the part of the government that Peru has been very successful in the past to grow its mining industry because it has kept the regulations in place for many years on one hand. On the other hand, it's being fairly competitive with our peers in terms of the obligations of the miners. So I think that once it gets certain and the industry will feel that the government has come to grips with the actual reality of the mining industry of Peru, and also the big potential that it has in Peru for further benefit of all Peruvians, then things will stabilize and investors will feel better about investing in operations in Peru.
Next question is, how likely is it that the company will pursue expansions at all three mines? And when will the feasibility studies be completed for Yauricocha and Cusi?
Well, we intend to follow a disciplined approach, Mark, and we look at the PFSs as the study that is going to determine what the layout for the expansions and the conditions for the expansion is going to be. So we're being very careful as we speak to make sure that the PFSs are providing us with that product. Once we finalize it, we have to look at all the resources that we're going to need at the three mines for those three expansions. My sense is that on one hand, we're going to prioritize them according to the right criteria. On the other hand, we have, in Yauricocha in particular, we have an issue with the permits. That permits in Peru take a while. We've just started with the baseline for the modification of the EIA, which eventually is going to take a couple of years to produce, and then we can look for the permit to build. So my sense is that just by permits, Yauricocha is going to be further down the line. Bolivar and Cusi might be before, but we have to make sure that the plans are right for both of them.
And then with respect to the iron ore processing plant, do you already have offtake agreements in place, or how will the sales work?
No, we don't have offtake agreements. We have already have conversation with a number of traders. We expect to sell it FOB Topolobampo in Mexico, and from there they can take it wherever they feel. But we feel that we have a good product. We're looking at actually two products. One is the iron ore concentrate, and further down the line we're thinking on building a DMS plant, a dense media separation magnetite product, so we can sell it for the industry, and that has a better price on the market. Our product can support that production. So our DMS product, we will take it wherever the customer needs it, and the iron ore will go to Topolobampo, and we are planning to sell it FOB there.
Next question is, what are your expectations for cost inflation, and are there any offsets, whether that be higher production, currency exchange considerations, or efficiency gains? And also, what about the treatment and refining charges?
Yes, I mean, well, this year we had a hit with the TCRCs because when we negotiated the price, the price was fairly lower, and we engaged into some contract with PP, with price participation, but those should be done by next year, and then we see a TCRCs going lower than what we have now. In terms of generally, yes, we're seeing some increase in costs. In Peru, due to that uncertainty, actually, the exchange rate has helped us, because now it was at 350, 360, and now it's at 410 soles per dollar, so that's helping us. In Mexico, not so much. But on top of that, as we stabilize and normalize our operations, we are certainly trying to incorporate as much initiatives to improve our cost base as we can through technology or through improving our processes.
That question just came in. What is the sustaining cost of the underground operations?
The sustaining cost. By Tony, you mean?
Yeah, that was just a question. I can get back to that person because I believe it's in your slide deck. So the next question is, would you discuss your capital allocation and return of capital framework? You mentioned the possibility of a dividend, and so how much and how soon?
Well, we still have to look at that, Mark. We as I shown in the presentation, we are a stable producer and we produce cash flow, but on the other hand, we also have growth alternatives which are going to require capex, and we also have sustaining capex for the operations. So certainly it goes first the sustaining, then we can look at the growth, and we are going to look at dividends for the future, since we expect to have stable and eventually increased cash flow that could justify to return some cash to our shareholders, which at the end of the day is our purpose.
And then would you briefly comment on the company's efforts to increase its reserves and resources to support your growing production profile? And I guess I would add on to that to maybe if you could elaborate a little bit on your last comment about the property in Mexico as perhaps being your next mine under consideration.
Yes, well, as I showed on the PEAs, we have over 10 years of mine life with current resources. Now, those resources have measured, indicated, and inferred, so we certainly have to drill more to make sure that everything is in place and on the right quality. But we feel confident that we have the resources for the growth. On top of that, we separate our exploration in two areas. One is the near mine, which actually is fairly strong on the three mines. As we speak, we're drilling nearby both Yauricocha and Bolivar. And eventually, if we find better ore than what we are planning to mine now, we're going to bring those into stream sooner than what we are aiming now. In Cusi, we're not drilling because it's still deep and we're not drilling that much. So near mine, we have a strong program, so we can bring through our mining infrastructure and to our current plant infrastructure, we have to build additional mine infrastructure, good grade or better grade ore into our mines. On top of that, we have the brownfield, which I mentioned at the end of my presentation. We have over 90,000 hectares in Mexico, which we are now relooking at, and eventually we're going to look at development. In our current budgeting exercise, we are planning to provide more budget for next year for exploration in those areas. We believe that they are highly prospective, and we believe that Sierra's growth is going to go beyond organic growth at our three mines and into these properties in Mexico or somewhere else if we find some other interesting and value accretive opportunity.
Then how would you characterize the company's financial strength and liquidity considering the company's anticipated capital expenditures, and are you able to repay debt early?
We feel that we can fund our growth and the debt with our own internal cash generation. But having said that, that doesn't restrain us from accessing the capital markets if we want to do more than what we have now. So it's fairly strong. The company has good assets. We are generating cash flow, but eventually we might want to access the markets, as I said, for further opportunities.
And then, I think I'll just end, the company has 3 available technical reports for each of its mines. Yauricocha has the after-tax net present value of $359 million. Sierra owns almost 82% of that. You put out the recent one on Bolivar, which increased, to $361 million, and then Cusi's at $81 million, and both Yauricocha and Cusi will be updated. So most investors can easily look at the cash position and the debt and the shares outstanding, and just based on those numbers, you kind of come up with an implied value of $435 a share. So that seems like that would be a pretty good opportunity compared to where the shares are trading now. What do you think has to happen to close that gap?
Look, we believe that the value of the company is certainly higher than what it's trading now. I would speculate on what the reasons are. Maybe it's what we just discussed on the uncertainty related to the Peruvian politics. Maybe it goes together with, if you see the trend of our peers also, for whatever reason, it's following a similar trends as we speak. But the underlying value of the assets, it's certainly higher in our mind to what you see on the market.
Yeah, I think once you kind of get past the COVID concerns, investors are a little more comfortable with the political regime in Peru. Not to mention, you start to see free cash flow accelerate, as these plans are executed. And so I think those would all, be catalysts, for the stock. And I think the one good thing that investors can look at in those technical reports is, if my memory's correct, I think you're assuming $3.05 a pound for copper and $20 for silver. So there's, it's certainly seems like a pretty conservative price deck in terms of what supports those the analysis related to the technical reports. Of course, there are a lot of assumptions. So with that, I guess that's about all the time we have for today. Luis, thank you for joining us and helping us gain a better understanding of the company's story.
Thank you, Mark. Thank you. Thanks for your time and thanks for the audience.
Thank you for joining us for this virtual roadshow presentation brought to you by ChannelChek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and micro-cap companies.